Okay. All right. Well, good afternoon, everyone. Thank you for joining us. Today, we're going to be talking about Schedule Cs. And Kyla, our resident expert in the category of business and Schedule Cs, will take us through the presentation. So Kyla, take it away.
All right. So like Linda said, we're going to talk about Schedule Cs, and then I also included some other business income as well. So we'll talk a little bit about that as well. So we're going to start with Schedule C, what income is reported, what expenses, what's in scope for us. To go along with that, there's the qualified business income deduction, self-employment tax, self-employed health insurance deduction, and then I'm going to talk just a little briefly about K1s. So Schedule C, basically anybody who runs a little business of any kind, that's not that's just a sole proprietor, so it's not set up as a corporation. It would count if it's an LLC, but not a partnership. So if it's just one person, then you would report it on your personal Schedule C on your personal return. We need to double check to make sure that it's for profit and it's not a hobby, so that we know how many, if we can take expenses or not on it. So the income can be reported in the following ways. Most of the time, people nowadays are getting a 1099 NEC or a 1099-K for the most part. Occasionally, they might get a 1099 miscellaneous instead. Or if there's somebody who's a statutory employee, they'll get a W-2 with statutory employee box checked. Or if their business is cash only, they won't get a form necessarily, but will need to use their tax records that of them showing what they received as income. Or if their income is really low from a certain place, they won't get a 1099. So it'll be what the taxpayers' books and records and bank accounts say. So these are what some of the forms look like. Up in the top left here, 1099 miscellaneous. For the most part, we'd only report it if it was other income. That's the only time we would maybe report it on a Schedule C. Otherwise, other income would go on the other income line on the tax return, but it depends on what it's for. So we need to ask the client questions. On 1099 NEC, this is the main one that we'll see. Non-employee compensation. It's a fairly simple form now, so there's really only two things on it. The amount that they made, and then if they had any withholding. And then the other one is the 1099-K, which they would get if they use like some sort of payment system of some kind or something like that. They would get this. And it shows how much they make per month and the transactions per month, and then there's a total. I am going to talk a little bit more about these because there's a bit of it's kind of bubbled up in the different things this year because they lowered the amount of money you need to have to get a 1099-K. So there's going to be a lot more people that are getting them, and there some of the amounts on there are not going to be for anything that they need to report, or it could be for something they need to report differently other than on a Schedule C. So there's lots of little nuances on that. So I'm going to get into that a little bit in a little while. So for what's in scope for VITA, we need to make sure that their expenses are less than 35,000. The amount of income doesn't really matter, other than the fact that we try to keep the income amount under 75,000-ish. But they can't have more than 35,000 in expenses. They need to be using the cash method for accounting, so when they receive the cash and when they pay cash, they can't use the accrual method of accounting where they have payables and receivables. We can't use inventory. Dr. Moody did find out the other day that they are piloting and in a few sites this year of doing some inventory. So we'll see if that comes out in the next couple of years, if we'll be able to do some inventory or not, but as of now, we cannot. We can't do it if they have a loss, a large loss. They can't have any of their own employees, so it has to just be them working. Depreciation, can't, or amortization, we can't do that either, although that's also being piloted along with the inventory, so we'll see what happens there. And then, they can't deduct business use of their home, so that would be out of scope for us too. So we can do Schedule Cs, but it's a little bit limited on what we can do. Basically, really small businesses or people's little side businesses and things like that. So, here's a list of the different expenses that people can take on their Schedule C. So sometimes when clients come in, they get a 1099 maybe, and we're reporting it, and they're like, "Wait, I have to pay tax on that?" Yes, you do. And they're like, and then we ask, then I usually go through and I'm like, did you have to pay for this or this or this? And if they're new, a lot of times they're like, oh, I didn't know that I could do that. So it's kind of nice to go through the Schedule C with them and say, these are different expenses you can do. If you can recreate the records, you can come back and we can put them in. Otherwise, make sure you keep track of them for if they're going to do that business again for the next year. But the expenses are advertising, car and truck expense, commission and fees, insurance, other than medical on this port, interest, as long as it's not mortgage, legal and professional fees, office expenses like pens, papers, postage, whatever little office supplies, rent if they have to rent machinery or equipment or anything like that, repairs and maintenance, other kinds of supplies. So like this, as opposed to office expense, this supplies would be like the supplies they get to run their actual type of business. So like if they're plumbing, it would be like their plumbing tools, as opposed to just like paper, pens, things like that. Taxes and licenses. So if they have to get licensed for something, or if they have to pay some sort of extra tax for something. Travel and meals. They did change the meals back to 50%. It had been 100% the last couple of years, but it's back to 50% of meals. So that's one thing to note that's different this year. And then if they have to pay any utilities, like if they have an office space and they pay utilities for that, and then there's just a catch-all of other expenses. Just some notes. You need to report business income regardless on if it's on a 1099. So if they just received cash or if they received less than the reportable amount to be on a 1099, we have to include those. So sometimes they might have multiple 1099s. We'll put them all in, and then they say, oh, I also got this amount, so we'll put that in as other income on the Schedule C, and the total will be their total income. So we need to make sure to ask to see, is this the total amount that you made? Just to make sure that we're not missing something. If they do more than one business, we have to do separate Schedule Cs. So if they're doing more than one thing, we have to make sure that we do 2 separate Schedule Cs. Hopefully they have their income expenses recorded. Hopefully they do some sort of bookkeeping of some kind, especially some of the ones that do like DoorDash, things like that. There's really not much bookkeeping that they do, so we might have to reconstruct some things, have them go into their apps to see how much mileage they had, things like that. So we might need to have them go back and reconstruct. but we're gonna have them do that, because otherwise that'll take up a lot of time for us. We can give them suggestions and things, but they need to go back and figure it out. Like I said, meals are 50% deductible this year as opposed to 100, but we have to make sure that it's for client and business related things. So it's like, oh, I'm having lunch with a client, I'm having lunch with a business colleague. If you're just eating lunch just by yourself, that doesn't count because you need to eat lunch to survive. So, so if it's just you eating lunch, even if you're out of town, that doesn't count. It has to be with a colleague or a client. They have to pick if they want to take mileage or if they want to take the actual car and truck expense. So we either do mileage or how much they paid for, or we would add up how much they paid for gas, car insurance, repairs on their car, things like that. But it's one or the other. Most of the time, mileage is more advantageous, so generally we do that. But some clients may want to do the other, but they have to pick. This year, the mileage rate is 65.5 cents per mile. So it increased a little bit, and there's only one mileage rate this year. Some of you might remember last year there was 2 different mileage rates, and we had to say, okay, when did you drive your car? We need to know what was before June and what was after June. But this year there's one, so we just need to ask them the total. So that'll be easier this year as far as that goes. And then I will show you, so this is what the Schedule C looks like this year. Is really similar to the past. You'd put the name of their business if they have one. Well, you put their name, and then if they have a separate business name, you would put that. You'd put their social security number. If their business is an LLC or something and they have an ID number for their business, you'd put that. Like I said, we make sure that we're doing cash method. And that they didn't pay anybody else. So, and then we would go through and we would put their 1099s in or their other income, and that would be pulled through here on the gross receipts. We can't do inventory. That's what this cost of goods sold is. And then we'd get a total income. And then these are the list of the expenses that I was talking about. The expenses will get totaled, and then the software will calculate the income minus the expenses to get what is tax, what is considered the profit for tax. And then that is transferred, and I'll show you in a little bit, to Schedule SE for self-employment tax to be calculated. If we could do inventory, there is a separate part to put all those calculations in, but we, like I said, right now we don't need to worry about that. And then if they are using mileage, we would need to ask them when they started using their vehicle, how many miles they used for business versus commuting versus just personal. If they used it for personal use, which most of the people that we see do use theirs for personal and business. If they have another car, and then if they have any documentation supporting how much mileage they used. And then part 5 is just other expenses that they can take as business expense that don't fit in any of these other categories. So that's generally what the Schedule C looks like this year. Any questions about that so far? Before I delve into mileage a little bit more? Okay, so mileage. We need to get this into our clients' heads that they can deduct, but not when they're driving to their first location for work, not to their regular job or a temporary workspace. It's only between workspaces is what their mileage is. So that's one thing we need to make sure that they're not adding their commute in there, that it's just how much they're doing for just business only when they're traveling to different clients and things like that. And you can't do it between your first and second job either. That's like commuting as well, or your second job and home. You can't between your first job and second job. But so that's the main thing about mileage, is to make sure we're only doing the business use, not the commute. So sometimes, like I mentioned, clients aren't always on top of their books so much. So things that we can suggest that they use, have them check their calendars to see when they were meeting with clients, or if they are old school and use the little appointment books or physical calendars. We can have them go on their mapping app on their phone to see if they have it on the tracking settings, so we can be like, okay, you drove here at these places, so they can recalculate the mileage. We can use IRS standard allowances if they can't come up with things. We can have them look at their bank statements, checkbooks, registers, their cash apps. If they have accounting software, we can have them look at that. Receipts, cell records, call records, and then we can kind of look at a prior year return if we didn't do it before, to see what kind of things that they used in the past. Because sometimes for like utilities, like a phone or something like that, a phone service or internet service, where they might use it for both personal and business, we would do like a percentage. We'll be like, how much do you use it for business versus personal, and we do a percentage of their total cell phone or internet bill. So there's things like that we would do as well. Any questions on Schedule C information before we move on to the business deduction?
A couple of times a question has come up about their basic cell phone expense.
Mhm.
So on like a pro rata, they use it, say 50% of the time for business.
Yep.
Is that kind of their full cell phone bill, 50%, or?
Yeah, I mean, if it's just theirs, I mean, if they have like a family plan or something, we'd have to like however many family members, divide it, and then do 50% of that. So there's things like that too. But yeah, if it's just them, then yeah, I would say we could just do the percentage.
All right, thanks.
Any other questions or comments? Okay. So one thing that they added a couple of years ago, well, it's probably been about 5 years ago now, is the qualified business income deduction. This is an additional deduction. It basically came about because they lowered the corporate rates a couple years ago. So this is to try to make up for that for people that have their own business and maybe are in a high tax bracket personally. But basically you can take up to 20% of your income as a deduction. And this deduction falls under right underneath where the standard deduction or itemized deduction is. So this is an adjustment to income. It's not a credit or anything like that. It's just deducting how much income you have. It doesn't affect what your Schedule C or Schedule SE calculations are. It calculates it based on the net of your Schedule C, and it doesn't take into account your self-employment tax. It can't reduce your income past 0. So it's even though it's 20%, if your income is, if 20% would be more than what your income is, then it would only reduce it to 0. And just as a high level, the deduction is either the lesser of the 20% of your business income or 20% of your taxable income minus your capital gains and dividends. So it'd be one or the other, whichever one's lower. And the business deduction is reduced by self-employment tax, health insurance, and contributions to retirement plans. And then the deduction is calculated on Form 8995. And once you put in that they have a Schedule C or another type of business like K1 of some kind, this will automatically be calculated based on what you put in those other forms. So, I mean, I would take a look and make sure it looks reasonable at the end, but it'll do the calculation for you, so you don't necessarily need to physically put in any additional things. Any question on that before we go on to self-employment tax?
Kyla, I just had a question. When you talk about there are two ways you can take the deduction, and the first one is 20% of the qualified business income. So I understand from what you've said that that's gross income.
Not necessarily. So it'd be your net income of your Schedule C. So it'd be the gross receipts minus the expenses you took on Schedule C. So it'd be the net
Okay.
of your Schedule C. But it'd be in addition to if you had K1s from other businesses, pass-through entities, it would add those to it as well.
I see. Okay.
And then
Thank you.
if you had multiple businesses, it would add the net income for each business together.
Okay, so it's looking at net income. Okay.
Yes.
Yeah,
Yep.
that helps. Okay.
Yep. And we can't do it, but if they had a loss, they wouldn't be able to take the business deduction.
Okay. Yeah, that makes more sense now. Okay.
Any other questions or comments about this? Okay. So some people really get confused, especially if they're just doing like DoorDash or something little on the side. They're like, well, wait, why do I have to pay this extra tax for? Self-employment tax, basically, what I am trying to explain to people more nowadays is, do you want self-employment in Medicare when you retire? Because if you don't pay your SE tax, then when you retire, your Social Security Medicare tax will be less. Because Social Security and Medicare in a way is kind of like a retirement account in a way. That's why your employer takes it out to put it in there. So then when you retire, you take it back out of the Social Security fund at the government. So a lot of people don't understand this concept. So but the thing about self-employment tax is it's because you have your own business, you're paying the employee and the employer portion. Whereas when you're working for someone, you're just paying the employee portion, and whoever you're working for is paying the employer portion. So it can get quite high for some people. Because the rate is 15.3. That's Social Security and Medicare together. Social Security is 12.4, I think, and Medicare is 3 point something. I don't remember exactly off the top of my head, but the self-employment tax will automatically calculate when you put your Schedule C in, because it's based on the net income of your Schedule C. So it'll automatically move over to the Schedule SE and calculate for you. The other thing though about SE is you will be able to take half of it as a deduction. So this is, again, not a credit, it's an adjustment to your income. So it'll reduce your overall income, but it's only half of the SE tax. And this will automatically be carried over when you put your Schedule C and it reports on the Schedule SE. It'll put half on the adjustments to income section. Any questions about this? Okay. So there's also a self-employment health insurance deduction. Again, this is also an adjustment to income, not a credit, so it'll just reduce the amount of your income. This would be your health insurance that you would pay for yourself if you were self-employed. You can't take more than what your net income is. And, yeah, so it's limited to the amount of your net income reduced by the self-employment tax. However, if they use marketplace insurance, and they have a 1095-A, and they were wanting to take the self-employed health insurance deduction, it's unfortunately out of our scope. So, we need to watch out for this as well if they're wanting to if they have both situations. And there is a separate place in the software where you can put the amount of insurance that they had. Any questions about this?
Yeah, Kyla, the second bullet has always confused me. So sole proprietor, and if I do a Schedule C for myself, and I actually use H&R Block software, and I'm on Medicare, so they automatically count our Medicare premiums
Mhm.
as paid under the self-employed business. Well, I'm just a DBA. There's no business as such, and so it's not like my business purchased it, because it's just me.
Right.
So is that true of non-Medicare type premiums?
Yes. Yeah. Yep, you can. Yeah, if you purchase insurance personally, yeah, basically the only time that you can't use your health insurance is if you're working for somebody else as well and it's their insurance.
So and most of the folks that do come in here, it's more of a sideline than a real business. And
Yeah, so most of the time we wouldn't do this for most people because most of the people are working as a W-2 job for somebody else. So we wouldn't be able to use it if it's that situation.
all right, thank you.
Any other questions or comments on this part? Okay, so let's get into this 1099-K for a little bit. This is going to be kind of confusing this year. For this year, and it might change next year. I was seeing a notice that there's potentially they might increase it again to like 4,000 or 5,000 for next year. So we'll see what happens. But as of right now, people will be getting 1099-Ks if they have gross income of $600, no matter how many transactions they have. In general, 1099-Ks are going to be coming from what are called payment settlement entities, or PSEs. So some examples of those are PayPal, Cash App, Venmo, or other types of apps like that. Or like if you're more of a business like Square or some of those other ones like that, you would get a 1099-K for. Or also like eBay, Etsy, Amazon, if you sell stuff on those platforms, you would also get a 1099-K. This is where it's going to be very confusing this year because some people use PayPal, Venmo, Cash App, for instance, for a lot of different things. They don't use it just for business things. They might be using it for their friends to pay them back, or they pay other people for stuff, or things like, or they use it as kind of a banking thing in a way. Some people do, because you can store cash on them to a certain degree. So we're hoping that, I know on some of them, people can go in and categorize what each of their transactions was for, but I don't know that you can on all of them. So if they categorize them, it should be correct, the 1099. It shouldn't include the personal payments and things, but that may not be true. So we'll have to talk to the client and be like, do you think this is just for your business things only, or does this look like some other things got in there? In general, if they think that it's not right, we need to have them contact that whatever company they got it from to see if they can get it fixed. That's the first thing we need to try to have them do. If they can't get it fixed, there is an adjustment. I'll show you the 4012 guide too. It has an example in there. You can do an adjustment where you report whatever's on the 1099K as other income on the other income line, and then you can do an adjustment to income for the amount that shouldn't be there. One misconception some people have though is they do need to pay taxes on personal things they sell. So if they bought a couch and they're like, oh, I don't need this anymore, and they sell it, you're supposed to pay taxes on your sale of your couch. Some people get confused about that because I had a client in particular where she sold a bunch of her clothes on Etsy last year and she got a 1099K, but and all of a sudden she was gonna have to owe a whole bunch because she sold all this stuff. But we have to report it as income. So this is the hard part, because if they do know how much they bought it for originally, we can use that as a deduction. But for people selling clothes or other trinkets and stuff that they have, most people, depending on how long ago they bought it, are not going to know, or not going to have those receipts anymore. So I'm going to open the 4012 guide here and show you something really quickly about it. A couple things. So, let's see. So they do have FAQs on the reporting requirements on the IRS website, because there's been a lot of confusion around it. So there's also understanding your 1099K that they put out, and there's also a whole separate thing about gig economy. They've also put out a fact sheet and frequently asked questions. So they do have a couple of examples in here. It says, do I need to report a gain or a loss if on my personal items? Yes. So if it's not for business and they're selling personal items, instead of going on a Schedule C, it would actually go on a Schedule D as a sale or disposition of assets. However, I did find out this year that this piece is out of scope for us. So let's just hope that people didn't do this so much this year as they did last year. Because this year we're not allowed to. If it's a loss, they can't take a loss on sale of personal items. So it will either be whatever the gain was, or 0. You can also report it as other income and that you sold items for personal, and then do an adjustment for a portion that was not for that amount. And then you can deduct if they do something like this, they can deduct the fees that they used on whatever platform they use. And then, so this would be like if they reimburse their friend for something, or if a friend reimbursed them. So we might see this situation where some of this gets in there and they can't get their 1099K adjusted. This is where we put in the amount that their friend paid them back for, or you'd put the total amount of 1099K. If you don't have to report it on a Schedule C, you'd put the whole thing. And then you'd subtract out the amount that was for the personal reimbursement. So I'm hoping that some of the things got worked through, but I'm not very hopeful about that. So we might have a lot of confusion with this, but hopefully we can get them to go back and contact whatever app they use and get the things adjusted and come back later. But we'll see what happens. But yeah.
So Kyla, if I participate in a garage sale, I need to report that as income?
Yes.
Thank you.
Any other
And-
questions about this?
And there's no dollar amount, correct?
No.
Okay.
You won't get a 1099K unless it's over $600, but as far as amount of income, if you do sell things, it doesn't matter how much it is.
Okay, thank you.
Again, it's one of those fine line things. You ask the client, hopefully they're honest with you. on if they did sell things, but ultimately the tax returns on them, so. But yeah, so we do need to ask, did you sell any income, did you sell anything? Things like that, other income you need to report. The other types of income that's considered business are you could get a K1. There's 3 types. There's one that's for a 1041, which is trust and estates, 1065, which is partnerships, or 1120S, which I got 2 S's in there, for corporations. The items on a K1 that are in scope for us is if there's interest, dividends, capital gains, royalties, foreign tax credit, or the 199A dividends. Anything else is out of scope for us. So on here, I have, wish I could blow it up, but on here, so it shows if there's nothing written in the box, we can do it. If it says this OOS, that means it's out of scope. So any of these OOS ones, if there's any of those on any of their K1s, we can't do it anymore. Only if it's the ones that are blank or say capital gain or whatever. So this is what a 1041 K1 will look like. They all look similar, but they're slightly different. So like this one has interest, dividends, capital gains at the top. This is the one for corporations, and as you can see, the interest, dividends, capital gains are kind of in the middle. So it looks very similar, but it's slightly different. Again, it'll show you the ones that are out of scope. So this is in the 4012 guide. So if somebody brings you one and you're like, wait, I can't remember which of the boxes I'm allowed to do, you can go to the 4012 guide, look through it and be like, okay, this person only has different dividends, interest, capital gains, things like that. We can do this one. If not, we'll have to refer them to somebody else. And then this is the one for partnerships. And again, it's a little further down, so they're slightly different again. Again, they look very similar, but there's slight nuances to each one of them. Any questions about K1s or anything else on the 1099K that anybody wants to talk about?
Kayla, I've got a question about the Schedule C. If somebody doesn't have a business, but they have one of those 1099 NECs, do we have to do anything on Schedule C, or
Yes.
we just fill out that top part and then?
Yep, fill out the top part, and we can ask them if they do have any expenses related to whatever that income was from, we can put that in.
Okay.
The ones that are really kind of unfortunate in a way that they put them on a 1099 is some of the students get certain types of grants on 1099s and they don't have any expenses for that because of what it is. I don't know why they put them on 1099s, but because of how the tax law is written now, we have to report it on a Schedule C. We used to be able to switch it to be put on other income so they wouldn't have SE tax on it, but that we can't do that anymore. They've tried to crack down on that the last few years. So if it's on a 1099, unfortunately we have to put it on there. I know I had a student last year where their grant was on a 1099 NEC, and their dad was really concerned about it, and I think he helped her pay, but I think they ended up contacting the granting entity and to see why did they put it on that type of form, and as opposed to a 1099 miscellaneous as other income, things like that. So it could be something where we might suggest that they contact the entity that they got it for and say, why did you give it to me on this type of form, that type of thing. But yeah, if it's on a 1099 NEC, unfortunately, we have to put it on a Schedule C.
Okay.
Any other questions or comments? Okay, let's see, I was going to. So this is what the 8995 looks like, the qualified business income computation. So to list each business or each type of business that you have, what the amount of business income or loss was, it would total that, and then down here it goes through, if you had, or it would calculate 20% of the business income, then it also calculate the 20% of the dividends and interest, and then it would take the greater or lesser than, and then it would take your income to see if it's less than whatever the 20% ends up being to calculate the qualified business income. So that's what that form looks like. And like I said, it'll automatically calculate once you put the Schedule Cs and K1s in there. This is the self-employment tax form. We can't do this either, but this will also be used for, even if they get a W-2, for like pastors, rabbis, whatever, clergy at different types of religious orders. They have to do self-employment tax, regardless, even if it's on a W-2, but that's out of scope for us, so we don't need to worry about that piece. Same thing with this farm stuff, that's out of scope for us as well. So the only part that should be filled out on any of ours is this part down here. So it would pull the net profit or loss from your Schedule C or your K1s. It would, let's see, those are calculations for the church people. We don't have to do, that won't happen. Then it calculates how much Social Security and Medicare tax would need to be taken. We don't really have to worry about this because our client shouldn't have this high of income, but Social Security is limited to, if your income's higher than 160K, you don't get Social Security for that anymore. So that's capped at 160, but we shouldn't have any clients with that high of income, so that shouldn't be a problem. But and then if somebody happened to have tips or anything or other wages that didn't have Social Security taken out, those would get added in here. And then it would be multiplied by the 12.5 and the 2.9 to get your Social Security and Medicare, and that's what your self-employment tax would be. And then it would take 50% to put as the adjustment to income. Since we're getting kind of close to one, there is several examples in the 4491 publication, which I have open here. And it's more of a textbook as opposed to the 4012 guide. So if you're more into reading as far as your studying habits, you might want to go into here. But there's lots of examples and little notes in here about each type of thing. So if you want to look through those, and I also have the examples in here as well. And then the last thing, so I do have the links to each of the things that I showed you. So if you want to take a closer look at those, I am going to show you though, if I get it open here. So I was noticing when I opened this FAQs for the 1099K, I was noticing that it says here, as of a couple weeks ago, the IRS is reviewing the FAQs, and there'll be an update soon. And as you can see, there is not an update at the moment. And when I look at the news release, it does say the IRS announcing delays in the 1099K reporting threshold. Plans for the threshold to be 5,000 in 2024. So, like I said, this is a little up in the air, but as of now, 600 is the amount. There's been a lot of concern, like I talked about, with people having with the different companies not separating personal versus what's business. that all these 1099-Ks, and since there's gonna be so many more, because there's 600, relatively speaking, is a low dollar amount as far as that goes. So there's a lot of concern that there's gonna be like millions of 1099-Ks coming out, so that are not gonna be correct. So hopefully they'll have an update for us soon, but we'll see. So is there any questions that anybody has, or comments, or anything we want to look over more?
So
Um,
Kyla, when does the K1s typically come out? So thinking, are we going to be doing a lot of amended returns?
Yes, so K1s most of the time don't come out till at least March. Some of them much later. So like, for instance, my family has some business income that we invest in. We don't get our 1099s till August. So there is unfortunately some instances of that. I think the deadline for them is March, to get their documents out. Same thing with like 1099 dividends, or brokerage statements, though that deadline is March. So sometimes the people that come in early, they're like, I'll have my W-2s, and it's like, well, do you have your other things? And so with some of the different deadlines, it kind of crosses over where that deadline's getting later and later for the companies to get stuff out, whereas they're keeping the personal deadline as April 15th. So sometimes it gets a little difficult. Occasionally we do have to either file an extension for a few people, or we'll put everything in other than the one form, and then we go back and amend it when they get it later. It kind of depends on the client on what they feel like doing. Any other questions or comments?
Kyla, I heard you mention farms.
Yes.
Did you say that farms are out of scope for VITA?
Yes.
Okay. And what if the person doesn't operate a farm but rents farm ground? Would that,
If farm rental is also out of scope. Now, if they just work for a farmer and the farmer gives them a 1099 or W-2 as just general income for working for them, we can do that. But if they rent the farm themselves, or if they run the farm, then that's out of scope.
okay, thank you.
Any other questions or comments? I know that was a lot.
Just as they're making some adjustments on the Schedule C for what might come into scope, we've been in meetings, Kyla and I have been, where they're thinking about some of the farm income kinds of things might come into scope, but as far as I know, nothing has moved on that yet. Because we do see some older adults who are retired that maybe their farm, they are renting it out, and that's all the income they have, those kinds of things. So it'd be nice to be able to do that. But at the moment, as Kyla said, those are out of scope.